supertalk1270.com. In-depth discussion and analysis of real estate issues nationwide and those issues unique to our area. Our team of experts includes Joe Sheehan, Greg Larson, Dave Floor, Brian Ritter, and a great variety of guests. The Dakota Housing Network begins now on Supertalk 1270 and supertalk1270.com.
And welcome to the Dakota Housing Network. Joe Sheehan here.
Dave Floor.
Greg Larson.
It's a full house.
It is.
And we got interest rates struggling a little bit today overall, though some improvement from the Freddie Mac survey. But one thing I know we kind of promoted the show. We told people we were going to have our interview today with Richard Cordray and Heidi Heitkamp.
We may have it yet.
But we've got some technical difficulties.
My fault, my bad.
And we hope to find that because it was we did get some news out of that.
Yes.
With the interview, and so we hope to find out. But in the meantime, we'll go ahead and move along with our regularly scheduled format and talk about mortgage interest rates.
Okay.
And
we can do that because we're mortgage guys.
That's what we do. We talk
real
about
estate
it.
And there are rates.
And there are rates out there.
There are
Yes,
mortgage
there are.
interest rates, and so the Freddie Mac primary mortgage market survey says
Down.
Okay,
Okay.
3.42 on a 30-year fixed rate mortgage, and down from 3.48, and the same with the 15-year, 2.72, 2.76, and that's pretty gosh darn good.
I cheated, Greg. I read that before I came here.
Did you?
Yeah.
I'm
sorry.
I wanted the
I had to-
surprise. I waited for it.
Okay.
I'm all at Twitter.
Okay.
I'm all into it.
Ooh, don't talk about
it
Twitter this week.
Not Twitter this week. No,
Ooh,
not
somebody
here.
got in trouble for
Yeah.
that
How
one.
bad was that?
Okay.
I feel
All right.
so very sorry for
I
that
do too.
lady.
Yep.
There's
Okay.
lots of things that there's lots of ouchy sores out there in the market,
yeah.
including
And,
Wells
you know-
Fargo, including Twitter, including Trump, including
Yeah.
This is not the ouchy show.
Yeah,
This
let
is
me-
the show that talks about 3.42 interest rates.
Yes.
Let me
okay.
rephrase that. I'm all aflutter.
Or a flutter. Okay. All right.
I'm all up
Okay.
for it. So let's go ahead and get to the mortgage market guide review of the market. Like I said, currently oil prices getting good news out of a potential deal out of Saudi
Yeah.
Arabia, which is actually impacting interest rates for the worst because it's giving a positive boost to the market. So let's see what Bill Bodner and the boys have to say at the Mortgage Market Guide. Mortgage bonds continue to drift lower after yesterday's surprise OPEC announcement, where a deal may be struck to cut oil production. The news quickly shocked the markets, with oil prices and stocks reversing sharply higher at the expense of bonds. As we said in our update and subsequent alert to lock yesterday, mortgage bonds are trading within a few basis points of resistance at a multi-year high. Multi-year high.
Oh, boy.
I mean, what do you even do with that since 2008?
Put a radio voice in. Multi-year high.
Multi-year high. What is a multi-year high now? Making them ripe for the reversal lower. The oil cut headlines provided the external shock to knock bonds off their perch, like the Brexit announcement. The oil story is far from over, and we are supposed to hear the details of the plan at the next OPEC meeting in November.
Whatever happened to Brexit? Did it die?
It didn't.
I don't know.
Boy, that was like,
was
that
that-
was the
was that
thing.
the
Now
la-
we don't hear anything about it.
Was that the
anymore.
last
Just-
adoptee from the Brangelina?
Ah,
Brexit? Oh, wait.
that could have been.
Brad Jelena
That's what that was
has
all
replaced
about.
Brexit.
That was all about.
I don't
World
know.
News, I
The
don't
names
know.
are so, I still come from an era where people were named Joe.
Yeah.
So,
Bob.
so anytime I hear some of the
Dave,
headlines and it's like Brexit, and I think it's just some celebrities. Kid.
Boy, this crew in here today, we got Joe, Jim, Greg, and Dave.
Couldn't get
I
much
mean,
more
you know what
traditional-
era we come from,
That's right.
Anglo-Saxon right here, boy.
and from what part of the country we come from.
Yep. So the Brexit really didn't do anything.
Jim's giving us a thumbs up.
I'm working on it right now.
Okay.
All right.
We found-
We found it.
We found the
Oh,
Heitkamp
now we're a flutter.
All right. Now we're a flutter.
Now
I am
we're a flutter. Okay.
Now we
all right.
are a flutter.
Okay.
That's
Anyway, let's
fantastic.
continue. So, yeah, what happened? The Brexit was
It
bam,
just didn't have the impact that.
and now we got.
It's kind of like why
It gave us great interest rates.
Kind of didn't happen.
It gave us great interest rates.
But now OPEC is we think we'll cut the production next month. But you know what I read was actually they put a cap on the number, which is actually higher than it was before. and Iran and some other country are exempt from it because they're just getting started back in the oil business.
Is this
So-
one of those things? Is this one of those things like remember when they were cutting the budget by reducing the level of increasing?
Yes.
Yeah.
That is what I got
You
out
know
of
what?
that story about OPEC. Was,
I'm going to lose weight by reducing the rate at which I gain it.
There
yes.
you go.
Exactly.
I love that.
That's what it is. That's what I
I'm
got.
going to adhere to that.
That's what I got from that story was we're going to cap production, but it's higher than it was 2 years ago.
We
Okay.
live in a world that's gone mad.
In a world
Yeah.
that's gone mad.
Okay. So
And
anyway,
the problem is when did it ever make sense? I wonder. You look, you just go back and you're like, when did it ever make sense?
so somehow I think that they'll come to. I think it's like next month they decide whether they're actually going to implement this cap, and then if they don't, or even if they do, everybody will realize, well, it's really not going to make much difference.
It's really a cap
So-
on. It's really a cap on the level of increasing.
Yeah.
Because we have unregulated oil supply coming in.
Yeah.
It's not just OPEC. It's Iran. It's Russia doing
Yeah.
whatever they want to do.
Yeah.
I mean,
So let's manufacture a way to keep the oil prices as non-profit making as we can for the North Dakota producers.
Yeah.
Let's
Yep.
come up with more
Well,
reasons.
I think we need government regulation that just says cost of a barrel of oil is like $55.
Yeah.
That seems fair, doesn't it?
Yeah.
A little profit.
I like the whole.
Gas prices won't get too high.
I like the whole idea of just running the world.
I think the CFP.
I like the idea like we're a pharmaceutical mental patient. We just do everything based on how it feels.
Yeah.
There you go.
There we go. Okay.
Because I mean, really, this is what it's going to come down to. Like the market reactions are all really about feelings.
It is.
It's like
Ooh, that feels good.
Yeah, even now that they've analyzed the financial crash and they go back and they find out how many really bad loans we had. The number of bad loans it was less than 2% of the loans that were even in the population that were bad. But it was really about how investors felt about it, right?
But it
right.
felt good.
So it felt bad, so the market
Felt good to
crashed.
regulate the heck out of it.
There you go.
So there we are. It feels
Okay.
good. So hey, we have to go into the break here in 30 seconds. We are coming back with an incredible interview, and once in a lifetime opportunity to talk with Richard Cordray, the director of the CFPB. Heidi Heitkamp, we did this pre-recorded interview. We're going to play it and we're going to comment on it because great interview on what Senator Heitkamp did here, as well as some of the comments by Richard Cordray and Community Banking. We'll be back after the break here on the Dakota Housing Network with
Stuff.
Yeah, stuff.
Stuff.
Right now, 51.
The home for ABC News at the top of the hour is Super Talk 1270.
Open up, honey, it's your lover boy, me that's knocking. Why don't you listen to me, sugar, all the cats at the high school rocking? Honey, get your
And back with the Dakota Housing Network, and it's Jerry Lee Lewis's birthday.
Yeah, I think he's 112.
Factoid brought to us by
Still alive,
Greg
right?
Larson.
Yeah, he's still alive.
Okay.
Last man standing
Yep.
There he is.
of the original $1 Million Quartet. He's the
Yep.
last one.
Last
That's
man
right.
standing.
Marry younger and don't do drugs. That's what that teaches you.
Yeah, drink a lot.
No, marry younger people. No, he didn't marry younger when he was.
No.
He was. How old was
that's what I'm
he?
saying. He married a younger person.
How old was he when he married his
Cousin?
Cousin.
Niece,
He
whatever
was,
she
he
was.
was 19 when he married his 14-year-old cousin.
He was only 19. Okay.
Okay. See, both are true.
Both are true.
Both are true.
Well,
Anyway, so
that was not totally out of the realm back
Do you
in
know
the
who
day.
his first cousin is?
Jerry Lee Lewis's?
Mickey
Yeah.
Gilly.
Mickey Gilly.
Mickey
Do you know who
Gilly.
else? Jimmy Swaggart.
That's right.
Oh,
that's
that I can see. Mickey Gilly, not so much, but Jimmy Swaggart and Jerry Lee Lewis, yeah.
funny. So hey, so we have this great interview. To set this up, here's what we got. We recorded an interview with Senator Heitkamp, Richard Cordray. Now, just to give you a little bit of a context for this interview, we're going to play the recording. We're going to interrupt it with commentary. Richard Cordray, the most powerful man in financial regulatory history
Yes.
in the world. And I make that claim because this is the largest financial economy in the world, and he reports to
Nobody.
the president
Sort of.
No,
Kinda. No.
no,
Not really.
He's regulated by the Fed.
No.
No.
The Senate Oversight Committee.
No.
Congress.
No.
No. This man has no essential reporting relationship except for this organization or his department is a part of the Federal Reserve.
Yeah, but that's
but
only
with no oversight.
no oversight. He just goes to them and says, "I need this much money,"
Here's what I'm going to do.
and they say, "Here's the money."
Miss,
That's
Yeah, his
Yes.
famous quote is, "It's good to be the king."
and he
Yes,
has to
yes.
go. He has to go before Congress, like quarterly.
he has to tell him what he's doing.
and he's telling them what he does.
yeah.
And that's it.
And he maybe makes a phone call and says, "Janet, you should know."
And actually, I think, I think that's just an excuse for the senators and the House representative guys to just make their speeches,
So
and then they can
exactly.
be done. And he says, "Okay, see you next week."
So setting the stage that that's who it was. Now
He's a big dude.
and we're
Powerful
gonna
dude.
let Senator Heitkamp in her interview explain what she was doing, why she brought him here, what he was doing, and the most surprising thing about Mr. Cordray, with all this power, with lightning at his fingertips, with his seat on Mount Olympus of the financial industry, was he has a really little voice.
Yeah. Okay. Well, he's
Just one of those things where you're kind of expecting so much power to come
But
with such
a
a
really huge sword.
kind of
he
but they very
Tyson is
really
there.
he has a really big gun.
well, and other things to know about him was he's Attorney General of Ohio before he got this job. Plus, he was a weekly Jeopardy champion.
I didn't know that.
Yes. He was on Jeopardy. I think he won the whole week.
You know, I remember hearing that now
Yeah.
that you bring it up.
So
So
a very smart man.
big honor for us to have him on the show. We're going to go to the interview, and we will interrupt it for commentary as we talk about. And we start with the show with just asking them what they were doing in North Dakota.
Here we go.
Welcome to the Dakota Housing Network. I'm the co-host Joe Sheehan, and today we have with us here Senator Heitkamp from the great state of North Dakota and the Director Richard Cordray from the Consumer Financial Protection Bureau. And how are you, Senator Heitkamp?
I'm doing well. Thank you for having us on.
Well, you recently were able to coordinate a trip to North Dakota and bring maybe the most powerful person in financial regulation in the world to North Dakota. How were you able to do that? Why did you do that? What was the point of the trip to North Dakota with Director Cordray?
Well, it didn't take a lot of work because Director Cordray, I think, really wants to hear from people on the ground. I think a lot of times he spends time sitting in the hot seat at committee hearings, but that's not where the most amount of information can get gleaned or learned. And so we extended the invitation for Director Cordray to come out and meet directly with community bankers to hear their concerns, to actually have a dialogue and not have a series of gotchas, but actually talk about this from a very real and practical sense. And I think all of the people who attended both the banker/credit union meeting and the auto dealers were extraordinarily grateful that Director Cordray came out and actually sat down and heard their concerns. We're going to advance some of the ideas, and hopefully we'll be able to see progress being made in terms of continuing the dialogue between regulators and these institutions that are so critical to rural America.
Clearly, you brought him out here to have that conversation. What were you hoping would be the outcome for North Dakota and Director Cordray at the end of the conversation?
Well, I was hoping a prioritization because so often when we're dealing here with concerns about regulation, all we hear is overregulation, and that really is not helpful to talk in generalities. I wanted to get down to very specific examples, very direct, kind of how will this impact my business.
And as we stop this right here, Jim, I just want to take a moment here to comment on the fact that what Senator Heitkamp's talking about, she does deserve a great deal of credit for. Agree with her, disagree with her, Republican, Independent, Democrat, however you feel about it. We're a state of 700,000 people, and in relationship to where we're at, you think about that. That's not even 1/3 really of the size of Minneapolis proper. You got cities like New York, they're 14 million, and to get somebody like Cordray out here to a population where quite honestly, he can have an impact with the pen stroke in a much larger area, which would have a lot more impact on a lot more people in one.
Right.
It does give her a lot of credit for wielding her influence on behalf of North Dakota to bring somebody out here to actually hear the voice of North Dakotans. And I want to point out what a big deal that is, and she does deserve credit for that. And on the other part of it, her asking for real specifics from the bankers versus just the cry of overregulation. It is really another thing that despite where you're at in your political views, is very important. And I hope that the bankers that were at this meeting really took advantage of it and really did give specifics, because it's a big deal to put specifics in front of somebody like Cordray who can actually make decisions and change how things work.
Yeah, and kudos to him for coming out and agreeing to come out to a small state like North Dakota. But I think he probably realized that, this is where when we're talking small town community banks, this is what you're talking about here.
You can take what we have, problems we have,
goes down to
experiences
South
we have,
Dakota.
and it works in whether it's Iowa, small town Nebraska, small town California. There's a lot of rural areas, and as big as those states are, there's a lot of towns of 400, 500, 600. They're just next to other towns of 400, 500, 600.
Right. Yeah.
Delaware, my home state, not that different at all.
Yeah.
So great job by Senator Heitkamp getting that out here, giving us a chance to be the voice for small town community, for rural America. And we'll go ahead and go back to the interview.
Okay.
Behind this, not saying that we had a meeting of the minds, but we had a conversation, which is more than what you can frequently have in Washington, D.C.
Director Cordray, welcome to the show. How are you today?
Glad to be with you.
How much Coogan and Nefla soup did Senator Heitkamp have to bargain with to get you to come to North Dakota?
Well, it wasn't difficult because Senator Heitkamp is somebody I consider to be a practical problem solver. She's somebody I greatly respect. She and I both had served at one time or another as attorney generals of our state. When she said that it would be great for me to come and have a chance to sit down with bankers, credit union leaders, and auto dealers in particular in North Dakota, I was glad to have the chance to do it. It's just a matter of arranging the schedules, and we learned a lot while we were there.
Senator Heitkamp, as you watch the community bankers and car dealerships and engage Director Cordray, what did you learn? What surprised you in the trip out here?
I don't know that anything really surprised me. I think that that day that we had the meeting, there was a report talking about the difficulty of banks under $100 million. There were well-represented banks there under $100 million, and that's kind of the pressure point. I think it was also an opportunity to try and figure out how the Bank of North Dakota is playing a role to bridge some of these concerns. And I think for the bankers, it was a way to look someone in the eye.
And we're going to pause the interview there, and we're going to go to the break. And when we come back, we'll continue on with Senator Heitkamp talking about, and we'll give a little commentary on banks under $100 million and just how that reflects North Dakota and what the problems are in the banking industry. And then we'll go back to her comments on that in the interview and Director Cordray. Right. Here on the Dakota Housing Network, after the break, more with Senator Heitkamp in the interview with Director Richard Cordray, the most powerful man in financial regulation in the world.
Right now, 51.
Dave Ramsey is heard here. Super Talk 1270.
As we come back to the Cordray Heitkamp interview, Dave, you have some more trivia on Mr. Cordray.
Okay, he was an undefeated 5-time champion on Jeopardy! In 1987, he won $45,000. He used it to pay law school debt, pay taxes, and to buy a used car. He was not able to participate in the tournament, Super Jeopardy! Tournament of Champions, because he was running for public office in 1990. But he did compete on the Battle of the Decades tournament, appearing in the show that aired February 5th, 2014, but finished second to aerospace consultant Tom Nozick. He did have to turn down the $5,000 consolation money because he was a federal employee. Right. And in 1996, he carried the Olympic flame through Findlay, Ohio, as part of the 96 Olympics that were in Atlanta, Georgia.
Well, now I understand.
Yeah.
He shouldn't report to the president.
He shouldn't.
The
Jeopardy
president
champion.
should be kissing his ring.
With that resume.
Jeopardy champion and torch carrier. Let's continue.
And it goes, and this sticks with our theme of what this show is.
Yeah.
It's three dumb guys interviewing us.
There you go.
And
this fits in.
He's probably a Rotarian.
He probably is. We don't talk religion on this show.
Okay.
Yeah, boy, we really nailed it on that three dumb guys asking smart people questions on this one, didn't we?
All right. Well, back to our interview. Senator Heitkamp talking about small banks, and just so folks understand what the size of a bank is, she's talking about banks underneath 100 million. Folks, that is an endangered species. Yeah. Banks underneath 100 million. Actually, banks underneath 500 million are becoming an endangered species. Those are the banks where you walk in and the bank presidents are still making decisions personally for people that they're borrowing to. They're the kind of banks that are in small communities of under 1,000, under 5,000. Those banks are becoming increasingly an endangered species. The new magic number, when we start looking at size and scale to really function and be able to operate in this regulatory environment as a bank and be able to compete for you as customers, really has become closer to $1 billion. Yeah. If you're under $1 billion, it's really difficult to have the size and scale you need to be able to pay the cost of being in banking and compete for customer business. Yeah. And so the banks they're talking about, folks, if you're in those small communities, one of the things you talk about supporting your community, you want those bankers there to be able to support and develop your communities. You got to support those small banks like that and do business with them, because they really are becoming an increasingly endangered species, and it's because of the expense of being in the business. Yeah. So we're going to go back to that. That's what she's about to talk about, and that's why it was so important for her to get Cordray out here, was to talk to those, and I'm glad she says they were well represented in the community. Play it. Again,
say, he doesn't care, or that's not, we're regulating with a big brushstroke and say, these are our concerns, can you help us? And to have, I think, a fair amount of sympathy being exchanged about how difficult it is to maintain compliance in banks that size, and what we can do to be more sympathetic, particularly in the rural areas where those relationship banking, that relationship banking history has been so critical to the development of our rural communities. And so I think one of the things that drives me crazy in this town is that it's all about that 20-second soundbite, or that spot on the news where it's all about controversy instead of dialogue. And this was really an opportunity for people to, number one, meet the person, but also to have a meaningful, I think, dialogue on what those challenges are.
Director Cordray, as you had the conversation with folks here in North Dakota, what were the messages you took away, and what messages do you feel like you conveyed back to the community bankers and people in finance that you met with?
So the first thing I would say, I agree with the senator. It's very different to be able to sit down and have a conversation over 60 or 90 minutes as opposed to the kind of staccato back and forth you often run into in Washington. And to hear people tell their stories about what it means to lend in rural areas without a lot of wherewithal, and to hear the way they tell it and exactly what their challenges are, is the kind of thing that can't help but affect your thinking. And one of the things I'm well aware of, and it was reinforced during the trip to North Dakota, is there are so many small towns and small collections of residents who depend enormously on their local community bank in order to have a functioning economy, in order to have business lending, in order to be able to get mortgages, and there really is no substitute for that. So whatever we can be doing to think about tailoring our rules and regulations such that we can recognize the situation of community banks that did not cause the financial crisis, that typically lend in a more responsible way with low defaults, and that look out, try to work things out for their customers. That's an important message for us to hear, and to hear exactly the way people say it as they're telling the story of their own institutions.
And so what were you able to tell them in terms of how your agency is actually going to be able to support them being able to act and be that conduit and stimulus in those communities to keep those economies alive and thriving?
So I think one important thing is many of them engage in mortgage lending, and that's been a focus of work by the Consumer Bureau, and we have learned to tailor our rules so that there are special provisions for smaller creditors, most of which were the types of bankers and credit union officials I was hearing from in that room. we have revised our definition of what is a rural loan, not once, not twice, but now 3 times, and the last time was in partnership with the Congress to make changes that now makes a state like North Dakota virtually entirely rural and gives people the ability to make loans, keep them in portfolio. They don't have to worry about various aspects of our rules. They don't have to take on compliance burden at the same level we expect the larger institutions to do.
That's fine. Okay, Dave, you're in the servicing industry.
Mm-hmm.
Are you aware of this definition of rural loans? And because I didn't know what he was talking about, to be honest with you.
Well, it goes back to the size of your as a lender.
Mm-hmm.
You know, they have the small lender designation, and then the rural area. I don't think that excludes. You know, Bismarck, Fargo is still not included in that,
which is almost
in Grand Forks and probably Minot.
So the problem is if I'm Dakota Community Bank, so for example, let's say I'm Dakota Community Bank, and I've got lending that happens. I'm out of headquartered in Mandan, or Bismarck Mandan. Well, but I have a bank in what's one of the small towns? Hebron. How does?
You're
so can they segment out a Hebron loan?
Probably not, and they probably don't want to because we're gonna have this process for this area, and this one for this area, and this one for this area. That becomes difficult from a back office workflow thing. I mean, that
becomes inefficient because now you got a different
and I might get 5 loans a year out of a small town like Hebron, but a majority of my business is Bismarck and
so this
Mandan.
is something that would only benefit if you're one of these banks that's under 100 million and your only location was in Hebron.
No, I'd have to go back and look because he said we've changed it 1, 2, and now 3 times.
Right.
No, I'm not sure what this third one is that he says virtually makes all of North Dakota. But when you say virtually all of North Dakota,
do you mean geographically or do you mean population wise?
I don't know. I'd have to look.
I just wanted to clarify that, but I guess that's one of these. This is one of the frustrations is that here it is. It sounds like he's listening. It sounds like things are actually being done. It doesn't sound like the words are falling on deaf ears, but it just doesn't transition to a practical impact because I don't know anybody can tell me how they're utilizing this definition to benefit their business.
You know what I think would be nice to have on here is to get he met with ICBND, is to get Barry from ICBND on the show and say what did he take away from that meeting.
This would be a great follow-up interview.
It would be very good. And the lender that's just in Rugby, North Dakota, and that's my market.
And that's the only place I'm at?
That's the only place I go. Okay, definitely rural. Okay, so I think he means that bank is not going to be subject to any of these rules and can go out and lend. Now, is the bank in Rugby actually doing mortgage lending where they're selling it on the secondary market? Probably not. They're probably doing what they've always done, a 7-year balloon.
But he did say that was the key is that they could they could portfolio these loans without the other expectations of that the CFPB has on larger lenders.
Yeah.
But it'd be curious to see if that's really impact. So it'd be good to have Barry on and ask him if that really is benefiting small town banks and portfolioing residential real estate without additional requirements.
Right.
And do they know that?
Yeah.
Do they know that there's this rural loan designation?
Yeah.
So, okay, back to the interview. And Jim, play it again.
All of that was reinforced on the visit and is part of the kind of input we are seeking in order to know how to go about our job and do it better.
One of the things I know when I talk to other community bankers as well is that even though you may write rules that exempt the small community banks from it, when they want to participate in the secondary services offered where they're dependent on the larger banks, it's the larger banks that often make them have to comply with the rules. So even though they wouldn't have to maybe take on the expense to do that 10-year in-house mortgage, if they want to try to help and offer the services of like the 30-year fixed rate mortgage, they are still up against the challenge of the expense to maintain the criteria to stay up with the regulatory requirements because the larger banks they're selling those services off to require it. Did you get into that? Were you able to address those concerns at all?
So I don't know why larger banks would necessarily feel compelled to require that. We have written our rules in ways that create special provisions for smaller creditors. We intend those to be the provisions that apply to these smaller community banks and credit unions. And larger banks don't need to impose any further criteria beyond those. But I will tell you one thing I did hear, and it was unique in North Dakota, was what it means to have a state bank of North Dakota as you have there. It's the only state in the union that has a state-run bank. It is not a bank that competes with the smaller community banks, but it's a bank that actually helps and supports them, and often does buy mortgages from them once they have made them and completed them. That struck me as enormously valuable, and it was interesting to see what a collaborative relationship had developed over the last 90 years, 100 years between the State Bank of North Dakota and these smaller community banks and credit unions as well.
Yeah. All right. With that, we'll pause the interview. We're going to go to the break. We'll come back in the last segment with the final part of the interview with Richard Cordray and Senator Heitkamp. And definitely some commentary on that he doesn't understand why larger banks would feel the need to impose requirements that clearly the CFPB is not requiring from smaller banks. Again, after the break, we'll be back with the interview with Richard Cordray and Senator Heitkamp.
Come on, baby, shake all night long. Shake till the beat come home from the bone, but I'm a wild one. Ooh, yeah, I'm a wild one.
Right now, 57.
Here's Sean Hannity, weekday afternoons on Super Talk 1270.
And welcome back to the Dakota Housing Network as we finish our interview with Director Richard Cordray from the Consumer Financial Protection Bureau and Senator Heitkamp. Real quick, just a 1-minute commentary. Breaking news. We got the director of the CFPB on recording saying he doesn't know why larger institutions require smaller institutions to follow rules that they're exempt from, because it is happening, and it's happening all the time.
Well, I know
examples. Why. Yep. And we know why.
Yeah.
But he didn't, and that there's no requirement for them to make people that they're servicing follow rules.
They're exempt.
They're exempt.
Yeah.
In the CFPB's mind, they're exempt.
But when we're not just talking about the Chases, the Cities, the Wells. We're also talking about Fannie and Freddie,
right? Where
as agencies.
The majority of the loans are going these
which
days,
goes
folks.
to show there's a disconnect in Washington between the regulators and the service providers in terms of how they're treating rural America and community banks. So we plan to share this interview with the Independent Community Bank, the National Association of Realtors, and get that out there so that they can take that interview of going, hey, the director, the main regulator saying he doesn't understand why you guys are making small banks comply with these regulations.
So go have a conversation with each other.
Yep. Try to connect. So
yeah.
Let's play the rest of the interview and take this to the final top of the hour.
To the state, it seems, and I hear a lot of positive feedback about it as well.
If I can add, just
absolutely,
I think
Senator.
it's incumbent on us to make sure that everybody understands what the rules are, and that if someone says, no, I can't do this because of this, in the example you just gave, we can't take these and put them into the secondary market because you haven't done the compliance that would have been required by a large bank. It's really important that we have that communication, say that's not necessarily true. That may be something internal to that large bank organization, but that's not a regulatory requirement. And so we don't want to create a situation where we're opening up the financial markets to the kind of shenanigans that happened in 2008. But by the same token, we want things to be value added, not just regulation for regulation's sake and not one size fits all. And we've been at the kinds of differentiation between the small community banks and the larger banks. One of the things that I repeatedly I repeat consistently to the community banks and the credit unions is that, don't be the stalking horse for the large institutions. Don't be out there arguing things that are only significant to them. Let's make sure that we have those delineations. And you see that as kind of I wouldn't say a chronic problem, but we constantly have to roll back and say, wait a minute, does that mean this is the difference between how you're regulated and how, let's say, an institution over $1 billion or $10 billion would be regulated, and let's not distort that line. And I think sometimes it's in larger institutions to distort that line because there's great sympathy in Washington to the plight of the independent community banks. And so that constant job that we have is to is to constantly remind people that that may not be a problem for a small community bank.
Yeah, and it's good to hear that community banks need to maybe have conversations and that there's support for those delineations in terms of regulatory requirements. That certainly could be helpful down the road. As one last question here as we run the last couple minutes, and then I'll for Director Cordray, and then I'll let you wrap it up, Senator Heitkamp. But real quick, did you get into one of the things when I'm meeting with community bankers all over is the fear, just the fear of the CFPB. And Director Cordray, did you get a chance to talk about whether or not they should or shouldn't be afraid of the CFPB?
We did, and that's one of the reasons why I thought this visit was so valuable, and I was appreciative of Senator Heitkamp bringing us out to North Dakota so we could sit down face to face. Now, we also often have the bankers, they'll come to Washington to talk to their members of Congress and their senators, and when they do, we always invite them to come talk to us as well. Again, there's no substitute for that face-to-face discussion. And I think that if they can understand better what we're trying to do, that we don't always think we know all the right answers, that we're trying to understand, we're trying to tailor our rules for smaller institutions, particularly in rural areas where lending is clearly a more difficult and a more burdensome thing than in densely populated areas. Those are exactly the kinds of things we should know, and it's the kind of learning that we should take back to the job we're doing. And I would like to think that the chance to sit down and talk back and forth and ask each other questions and hear from each other's point of view both help us understand one another and should reduce that anxiety that people have about anything new or anything that seems potentially different.
Well, we appreciate that.
Yeah.
Senator Heitkamp, your last word.
Well, the last word is that we aren't going to fix things, entirely with one meeting, but to simply open up the dialogue and say, please understand. And I think sometimes people who are working really, really hard on community development, which a lot of our community banks think, if I only get a chance to explain what I'm doing, and I find that these kinds of visits are so critical, whether it's bringing out the Postmaster General or whether it's bringing out the head of the FDIC, to actually create a human relationship as opposed to kind of the big bad regulator and the big bad banks. None of that really solves the problems that we're in, and none of us want to see a repeat of what happened in 2008, but we also want and understand the need for credit and the need for financing, especially home mortgage financing. And so that'll continue to be a huge priority for us to keep these smaller institutions in the mortgage lending business.
Well, Director Cordray and Senator Heitkamp, we greatly appreciate you coming on the Dakota Housing Network and talking about the visit to North Dakota and the commitment to solving problems and especially serving the rural areas and keeping them strong and robust. So thank you again for coming on the show.
Just a couple minutes left here as that interview winds down, and just kind of wrap up the show here. I think pretty good interview, certainly.
Mm-hmm.
One big comment out of Richard Cordray that hopefully can help conversations. We use that recording with some of our representatives and some of our lobbying organizations that can hopefully help maybe get the conversation started with big agencies and big investors helping streamline and find a way for smaller banks to do business and offer the services that right now they really can only get from larger lenders.
And we have to remember, he made the point about the Bank of North Dakota being here. And
we totally missed that.
And the housing finance agencies here too, where we're able to buy those loans from the banks. And the Bank of North Dakota will actually, if that small bank will refer somebody to them, they'll originate it for them. And that's just something that a lot of no other state has that. And that's something to remember, is that, South Dakota is basically like us. They don't have that option. For
that
small
is a huge deal.
That makes a difference.
That would work for any state?
So
they've looked at it.
Yeah.
Jim's question: will Bank of North Dakota work somewhere else? Other states have looked at it, but that's probably not going to happen.
Yeah,
politically and
for
financially, lots of reasons.
I don't know if we would. I don't know if we could do it again.
Right. Yeah. It was a unique moment in time.
We leverage it. We leverage it because we got it. I don't know if we could do it again.
Yeah.
That is a great point that Dave's making. That so really lending here is better rurally than anywhere else because Bank of North Dakota has never called me for my QC plan. Bank of North Dakota has never called me for a recertification.
Because they know you and they trust you.
Yeah, and you've never called me for a recertification or a quality control plan.
You trust Joe?
Yes.
Okay. I just want to double check.
which are all requirements for my other investors. All my other investors, every year I have to do a recertification, and it takes a few hours, and it's a big stack of paperwork I have to send in to show that I'm complying with all the rules under Fannie, Freddie, FHA, all the new guidelines under the CFPB like TRID and TILA and all these other things. And the local BND, Bank of North Dakota, and the North Dakota Housing Finance Agency don't require me to do all that. So think about it if you're in Nebraska, if you're in Wyoming, if you're in Iowa.
And that's really a throwback to the quality of hometown banking.
Yeah.
That's being taken away.
Right. Yeah.
Yeah. Well, thank you for tuning in to the Dakota Housing Network. We hope you enjoyed and got some benefit.
We'll have that up as a podcast in a day or two.
Fantastic. So watch for the podcast in a day or two of Director Cordray, and we thank Senator Heitkamp for getting him here and arranging the interview. We really appreciate our team in her office for putting this together.
Thank you.
This has been the Dakota Housing Network on Super Talk 1270. Join us again next Thursday morning at 11 a.m. The Dakota Housing Network is heard weekly right here on Super Talk 1270 and online at supertalk1270.com.